if we want more renewables, decarbonization, that means more mining, and that connection probably is still not there.
You will continue to see these ebbs and flows into these batteries based on availability of materials.
Efficiencies and squeezing more units out of both the recycling and the primary are going to be very important in bridging this supply-demand deficit that could really rain on this parade.
Biden, for example, restarted offshore wind, and yet copper is not on their critical metals list. So you've got a very big disconnect. You've got a lot of catch up.
I've got a stellar panel with me from a mixture of backgrounds, both investing, metallurgy, analyzing, and running special projects within the sector. And I'll introduce them in turn. I've got Francesco Baresi, investment manager at RCF, based down in Santiago. I have Ken Hoffman, senior expert in Basic Materials Institute at McKinsey. He's back in New York, I believe. Erez Ishalov, managing director at Traxys Battery Holdings, also in New York. And Kimberly Berman, I mentioned, she will be joining us very soon, just having some technical issues signing in. And she's special projects and equity research manager at BMO. So look, we're really well placed, and thanks everyone for taking time to get us into tackle some of these topics and some of these themes. I wanted to start first by just casting out a question. Are we all in agreement around EV adoption rates? And by that I mean they're becoming more and more sensational as the years go by, exceeding projections, accelerated by the pandemic and the conditions there somewhat. Everyone's bullish on EVs, but are we in agreement around the adoption rates based on the materials available to keep the car production, the vehicle production going? Maybe I'll put that as our starting question to the panel. Ken, we talked about this the other day. Do you want to kick us off? I know you're very bullish on.
Yeah, we are. I mean, and I think the reason why we're so bullish is, for a while, I think, government regulations was the thing really pushing the move to EV adoption. And that's still very true. However, as the cost of EVs have dropped much, much faster than what we thought, you're talking in the 80s per kilowatt hour for an NMC battery today, with that type of movement, and we think continued movement and cost dropping, that you will see this EV adoption. Now, when it comes to your materials question, there's going to be a lot of different ebbs and flows. That we saw this year, the massive, about 170% increase year over year in LFP adoption. You will continue to see these ebbs and flows into these batteries based on availability of materials and how that's going forward. The good thing is we have many, many chemistries to move into and to move out to. So we do believe that we will find solutions to these material issues. Could be a very volatile ride for the raw material cost, but the revolution moving from an internal combustion engine world to an EV world, we think is almost unstoppable at this point.
Right. Yeah. Erez, do you have a conjecture? Are you
No, we think that the S curve is here, and perhaps the sort of more moderate type of 45 angle slope that we were seeing in some of the tables and projections a year or two ago, kind of reaching sort of about a third in 2030 and so on, is going to happen differently as far as the demand side is concerned. I think that from that perspective, we're talking about, it's future tense. I mean, it's present tense. There's no futuristic utopia about it. We're there. Everything except materials, and so from the demand side and in terms of adoption, psychology, pricing, costing, and pretty soon also in terms of level of comfort and the ability to charge, range anxiety is over. I think we're definitely there, and the only cloud that could potentially rain on the parade has to do with materials and with the supply side. but everything else is all set for this revolution to happen, and it might be a lot more like smartphones than what we thought initially. It might just, once the floodgates open, it might be a lot more rapid than previously perceived.
Yep. Francesco, I'll just introduce you. You're coming at this from a private equity perspective, a deal-making buy-side view, and that's why it's integral to this discussion, I think. But also, you might not sort of cover EVs in the same light that our peers on the panel do. But how do you see that narrative impacting your role? How close attention do you pay to that?
So we are agnostic in terms of when we do our investments. So at the end, for us, is about risk return. But on the EV theme, I'm certainly in agreement with Ken. I suspect, it's a reality, and it'll happen. So it is more of a question whether it's going to happen super fast or maybe slightly slower, but it's coming. Yep. If you look at the numbers, you'll see that I believe 2020 there was about 3 million vehicles EV sold. 2021 it'll probably almost double the number. And that's a huge sort of increase. So there's going to be, of course, ups and downs, but it's coming. I think it's inevitable.
Yeah. Is this changing the impetus, though, in terms of your strategy within RCF? As you say, you look at case-by-case basis. You don't look at necessarily that full analysis. You're investing in mines, in mining companies. But are you leaning more towards battery materials? Is copper a larger focus within the portfolio now because of the electrification narrative?
Not really. Of course, we believe it's going to happen, but at the end of the day, we have to be careful with valuations. So there's a natural tendency of getting super excited, and then valuations are crazy. So we look each opportunity in its own merit, but we do see certain trends that are happening, maybe not fast enough, but supply chains are basically are very long at the moment, and there needs to be some rationalization. It is still to be seen who's going to win from a jurisdiction perspective. But the role we play, we certainly are keen in playing a role in funding the required materials for this revolution to happen.
Yeah, certainly. Excellent. We've had a question come in around power grids and power generation being a limiting factor towards the speed of adoption. And I guess just to add to that, we think about, you mentioned supply chains, Francesco, and then also, semiconductor shortages, particularly in Europe, slowing down automobile manufacturing. Does the panel, do you all see this as a sort of a short-term bottleneck that's come out of this exceptionally strange almost 2 years that we've had? Or is this really a case that everyone's scrambling for these essential materials and really straining existing supply chains, and that could have a slowdown effect on adoption overall? Eros, do you have a view on the supply chain challenges, whether they're sort of short term, or do you see this becoming more of a long term issue?
I think that let's put it this way: the stability and robustness of the supply chains that will support this segment are something that needs to be dealt with. We will have bottlenecks, like the bottlenecks that we had during COVID, or now with the rise in gas and diesel prices, etc. But regional supply chains, I think, are something that will develop more and more for energy intensity reasons, for political reasons, for stability of manufacturing, etc. So we will see that, and we are seeing, there's something that we kind of like to call the pan-Atlantic supply chain as something that's going to emerge, and we're obviously investing heavily in Quebec, and placed a couple of investments in even one Graphite, and then Nemaska lithium, invested in life cycle as well. So we do see the importance of making that more robust. But definitely, we're talking about materials that sometimes, as they move from the mine, the percentage in terms of concentration level is not very high, so they're moving a lot of material. In terms of the conversion chain, a lot of the processes are energy intense. So assuming you want to accumulate too much of a carbon footprint from mine to cathode, or mine to cell, you need to also try to either over time become more efficient and perhaps develop processes that perhaps more hydro and less pyro, and things that can save on that, or make sure that when you are consuming power, you'll be consuming something that's generated from renewable sources, like is available in certain places in the world, in Scandinavia, and in Quebec, and New York, and so on, in Brazil, in some places. So it's it's sort of a global kaizen, if you will, to squeeze on all components of the supply chain, and try to just tighten things up. Try to be as efficient as you can. Try, when you do consume energy, to consume it from green sources. And if you need to move material, you need to try and move it on the most concentrated level into the shortest distances. And it's simply going to take a while before everything kind of falls into place and stabilizes, and where one link of the chain ends and the other one starts, and there's a bit of overlap still. And it's going to take a few years for these things to clear up, but I'm sure that over time it's going to stabilize and be streamlined. So we're optimistic. That's what we do in practice. We build these supply chains, and we think this one will go well.
You mentioned Quebec and the hydro qualities there. How do you see the rising costs of energy impacting investments, mining companies, for instance, and their sort of energy inputs? Obviously, hydro is quite clean, might be abundant and cheaper if you're near to it. Mm-hmm. But do you see a cost wave coming that's going to sort of impact a lot of the juniors that you're invested in?
No, what we are seeing, though, is that they are becoming more and more aware of the need to perhaps combine renewable energy as a project, whether done by a third party in liaison with the mining company, or to somehow include it in their feasibility. So we're seeing that where it's relevant, there's discussion about teaming up with solar, with wind, to try and provide power to the project. We're seeing that wherever there's sulfur involved, and you need to make sulfuric acid, you have a sulfur plant, etc. It also generates energy, which can then feed the project. So we are seeing at least a desire to integrate production of renewable energy with the upstream and the initial increment of the midstream, I would say. So this is something that partially resolves the issue. And over time, we will be hopefully seeing more efficient processes in terms of of these energy intense type of conversions that will perhaps allow to consume less, and will bring into the economics projects that are situated where this energy is not available at the moment. So just as an example, in PGMs and base metals and nickel, there's a technology called the KEL process, which a company called Lifezone is now starting to implement in Africa, in Cinnabello Platinum and in Kabanga Nickel, where basically hydrometallurgy is replacing pyrometallurgy. So examples like that can unclog a lot of sort of locked regional capacity and become relevant, and at least where we can, have some effect. And one of the companies we invested, Movement Graphite, which has an open pit graphite mine, has taken the decision to use only electric yellow equipment.
Right.
So over there, you'll be charging your electric yellow equipment with hydropower. So, it doesn't get any greener than that, I think.
Excellent. Francesco, how do you look at green credentials or sort of sustainability, sustainable energy sources within the investments you make? Obviously, on the junior tier and an exploration stage, it might be slightly harder to implement such things, but there are cases of it.
Yeah, no, we do focus on sustainability, and for a number of reasons. It's not just about clean or sort of decarbonization, but it's also about social license to operate. So it's very important for us. We tend to partner up with financiers that also view. So I think as long as it's I think the investment criteria, put it this way, is become more strict.
I don't know if everyone can hear me. My computer seems to have frozen. Can you hear me as well?
Yeah.
Okay, I seem to have lost my screen, but I'm just going to do this one orally. Yeah, thanks for that. So, Ken, I wanted to sort of backtrack just a tiny bit to how you see the supply side crunch. The question I put to Eero is just around semiconductor shortages, the supply chains becoming a bit more strained. People industries, governments looking to sort of localize as well supply chains, particularly around the future of automotive. How do you see that developing, and whether you think these short-term blips are perhaps going to smooth out quite soon, or indeed there's a fundamental restructuring going on?
Well, I mean, I think there's a lot packed in, and imagine you're an OEM purchasing manager, and we talk to these guys all the time. I mean, not only do you have to worry about buying the material you need to make your EVs or supply, most of the OEMs want to control the purchases of these raw materials, but they have to be ESG friendly, and they have to, and localization is an important factor. One of the things, you could very well see is, history repeating itself. Remember Ford Motor in the early 1900s, they had their own steel plant, they had their own glass plant, they had their own plastic plant, because the industry at that time could not provide the materials that they needed and the quality that they needed and the on-time nature. So they built a massive, complex right next to their auto works. You're seeing Tesla move further and further and further upstream. You're seeing Volkswagen move further and further upstream. What could very well happen from the OEMs is they will not wait for the mining industry to provide this materials. They will force the issue by making investments, by making joint ventures. You're already starting to see this pretty significantly in the lithium, and starting to see more and more in the nickel industry. So this is something you're really going to see the industry really come together to solve this. And it could be through joint ventures, it could be through alliances, and it could be through direct investments. Whereas before, most auto companies would say it's not what they do, mining. Now they're starting to say, well, who can we work with to get this mine off the ground faster? Because it needs to fill in what we need. And the number one ask we've had over the last 12 years is, can you provide us a carbon curve for every single lithium, nickel, cobalt, copper, aluminum, steel asset on Earth? Because we're nowhere going to get taxed on this, and we're how do we put all this together? So the complications are quite massive.
Indeed. Hi, Kimberly.
Hi, how are you?
Thanks for tuning in. Yeah, sorry about those delays earlier and technical.
That's okay. That's okay. I just gotta fix the lighting here.
Yeah, no problem. We'll keep going.
That's great. Sorry about that. Go ahead.
Yeah, Go on, Eris, please.
Yeah, no, I just want to, I agree with Ken. And one of the things that, we were closely monitoring a few years back was that, as OEMs, since the days when, when Henry Ford and Edison owned rubber plants, plantations, to make their own tires, they became, designers and marketeers and sort of conductors of a very long chain of contractors and subcontractors, where ultimately they were just assembling. And now they have to, everything is to some extent deconstructed and needs to be reconstructed. And since the mining sector and the majors and some of the chemical majors didn't really rise to the challenge in the, previously, and fill this supply gap and give the level of certainty that, materials will be there. Sort of a bit of a panic and idea, and do your own started to sink in. But we always thought that, one of the things that OEMs could have done is seed the sector, seed the supply side by supporting private equity funds like RCF, like some other funds that that we're involved in. And basically, instead of taking a specific bet on a specific project, a specific mine or a plant, which is perhaps beyond their natural skill set and level of comfort, to simply just make sure that there's enough seed money and enough money to get projects off the ground and to get the ball rolling. And we haven't really seen that to the level that we thought. We are, as my colleagues were saying, starting to see perhaps some direct investment, some investment in technology, etc. And I do think that it actually makes a lot of sense for OEMs to spend part of their R&D budget, development budget, in just acting sort of like a fund of funds and participating in as LPs, with just as giving the discretion to the investment manager to help stimulate the supply side and to bring as many projects in the relevant materials into production. And then from that point onward, market forces will get things done. If the supply is there, you don't even need to even have a specific offtake agreement with the mine that you funded, because if all goes well, it's great. But if it doesn't work out, then you're not going to get material. But if you can participate and act as sort of a funnel or a hub, sort of marketing with a hose and not with a spoon. So I would say feeding with a hose and not feeding with a spoon. It could work. It could go a long way. So I'm a little surprised that they didn't really do that and allocate some of their budgets and some of their development money to funds and to investors that actually take these projects forward, de-risk them, and get them built.
Well, perhaps the others can opine on this, but just to that point, I'm sure the junior mining companies would love that new capital coming in, but are the OEMs sort of more of a sort of de-risk tech mindset where they don't want to be taking on that mining risk and putting equity into mining companies? So the offtake works, the model's fine, but they're still averse to kind of dipping in large pools or taking up stakeholder positions in mining companies, or maybe we're about to see that twist.
Yeah, no, what I'm saying is that if they would do it instead of a company specific, they would put the money into the right investment managers, which then go and invest in 10 projects in the various materials that are relevant for them. And you do that with 10 investment managers, then then it's a serious stimulus to the supply side, just as important as some of the early risk government initiatives. So this is a way where the private sector and the ultimate customers and beneficiaries could help quite a lot.
Yeah, there's this question of risk capital. Someone had pre-submitted a question around that as well. Actually, didn't believe there was enough risk capital available for critical minerals to be developed. Certainly at the exploration and development end. And Francesco, I guess that's exactly where you come in. But private equity is certainly not. It's niche, if I may say so.
Yes, I mean it is correct, and probably and that too. I mean, there's definitely not enough capital being allocated to the industry, especially in exploration. But I think, look, with commodities in general, there's always cycles. So if capital doesn't flow into exploration, into the mining industry, there's only one scenario possible, and prices are basically going to go up until someone says, okay, now it's time to put money.
Yeah.
When you look at it from a sort of fundamental perspective, you'd want that capital to be available sort of earlier, so we don't run into these issues. But I think at the end of the day, it's just the nature of the investors. They just want to see the price first, then they get in.
Metals prices have been on a tear, for the last year. We're in a good bull market for most of the metals that we follow. Is that not enough, or is it a case that the rest of the world's looking quite buoyant? Crypto, equities in other sectors are looking quite buoyant, so it's kind of keeping the attention and the capital flows away at the moment.
Look, there's a bit of both. I think if you look, of course, this year has been a great year for commodities, but not that long ago we had 6 really bad years, even though we all knew the EV revolution was coming. So I think that there's also a bit of that. Now, private equity, and the reason we like private equity is because it's a patient source of capital. So we invest through the cycle, and we've kept investing. But there's not that many out there, and still, well, you also have the issue with the projects not being. There's not that many projects that are robust or advanced enough. So it just takes time. It's not. If you look at the average time that takes a project to get into production, it takes some time. Look, the good thing is to feed the amount of materials and commodities that you need to supply to basically make possible this electric vehicle revolution. There's gonna be a lot more projects needed to come into production, and at the pace at which they're coming into these days, it's not enough. So we tend to believe that there's going to be some very positive years ahead of us.
Okay, let's pick on copper for now, just as a sort of kingpin of electrification, if you like, and thinking about lack of quality copper projects out there, and then the amount of time for them to come online, and then also the copper boom that we're sort of in now that's suddenly picked up. Kimberly, you've put out some reports recently on copper as well, so perhaps you can take this one or the lead on this one. But is the incentive price there now for generalists to get back into great copper development projects?
Absolutely. And I'd like to reiterate what, like Francesca said, was that, the private capital is patient. And I think that's a very, very important point. And that's what has to happen as well in the copper area, is that, there is a big imbalance right now. And when we did our numbers on the demand side, we see, there's really no substitute. There's really no substitute for copper. You can use aluminum, let's say, that could be, you can pre-treat it, you can use aluminum, but then you need a larger engine. You need a larger sort of facility. So, and it doesn't bode well in extreme temperatures. And so you have a lot of technology on the chemistry side that needs to happen in order to make aluminum a substitute. So that has to happen. And basically, we believe that has to happen because there has to be some substitutes for this. Another thing is that, like you talk about carbon nanotubes, for example. That's another one that we get a lot of questions about. This is at the early stage of development, and it's easy to make a little thread, but it's not easy to make that yarn, that huge, like the type of material that brings all of those little threads together. And it's like sort of like a piece of wool that if your grandmother knitting. And, basically like manufacturing that, and it has to be perfect, and you have to bring it together perfectly. This is very challenging. So you've got like no substitutes really for this copper, and it's a very copper intensive. Like once you have, you have wind turbines, for example, it's copper intensive. The further out of shore, like, one of the things about offshore wind is that people are thinking, well, let's bring it out further and further ashore to alleviate some of the visual pollution and other problems. And that residents in the population and, public outcry has determined, and it's actually possible, and it's easier to do because it's less red tape. It's, you're putting it in areas that are less ecologically diverse, because the ecological diversity is right by the shorelines. So, the more out you put, the more copper you need. You need copper. It's been around since the 18th century. It doesn't pit, it doesn't oxidize as much, it doesn't deteriorate, it withstands dewater. So basically on the demand side, you've got a huge issue coming your way if we don't get this substitution involved.
Yeah, but the substitution thing, how realistically and scalable is it to use something like aluminium, sort of refine certain aluminium technologies that I've sort of read about, or is it really just not scalable to replace the utility of copper?
It's just still at the early stages. Like you need to test them out. I mean, it's if you're in San Diego and it's bright and shiny, and you can actually use the aluminum technology that's out now with the coatings, because what happens is the aluminum is basically the minute it touches air, there's like an oxide coating that's very, very hard, and you have to actually like pre-treat it, or you have to like cut it and break the aluminum, or you get cable fires. So this is definitely an issue. And so when you have this in a perfect climate, that's great. Okay, so perfect. You can use it in stationary applications when you need a larger amount of aluminum in order to get the same conductivity and resistivity, same conductivity basically as copper. Then you need a larger sort of turbine. But what about wind? That's not going to happen. EVs, that's not going to happen, right? So you have to basically, you're having you're increasing weight by the size. You're increasing the size, potentially increasing the weight, because then you have to do these coatings on these wires, and so that technology is still nascent.
Interesting. Anyone else want to share a view on copper before we move on? There's quite a few questions submitted on a mixture of areas.
Just a quick thing. One of the things we do is we tear down a lot of EVs. We've torn down about 15 EVs over the last 5 years. The one interesting shift we made in our copper forecast is it used to be about 4 times as much copper in an EV as an internal combustion engine. The industry, now that they're quite serious about making EVs, they've cut that number down to about 35 to 40% more copper in an EV, mainly done it in the thinness of the copper foil inside the batteries. So you've seen a massive reduction in that. And the wiring also, they've gotten much more serious about that. So one of the things, while that hurt our forecast, what's helped our forecast is we're a huge believer in fast charging. All the consumer interviews that we do, it's fast recharge is, along with range, top of the list. And so we've greatly increased our infrastructure copper. So net, we probably haven't changed our numbers very much, but we moved it from one section of the economy to the other.
Yep. Excellent. That's interesting. And yeah, that's the advantage, the R&D, and sort of designing out the supply side risks, whatever method we're talking about here. Okay, let's come back to batteries. I've had a lot of questions in around recycling. What's the key to recycling EV batteries? What's the status? I guess if we were to sort of like refine this into something more meaningful, is the recycling of EV batteries or lithium-ion batteries at a state yet where it's profitable, self-sustaining, really making material impact in metal supply? Or how far off are we from all of these desirables?
I'll answer that. We're very far off. I mean, imagine an EV battery lasts 10 years.
Yeah.
10 years ago, we sold 47,000 EVs. Probably most of those are in a museum someplace.
Yeah.
So the bulk of EV battery recycling today comes from two main parts. One, from the cell companies themselves. Cells have very high reject rates. Up to, when you start a new chemistry, you can have up to 30% reject rates. So the recycling at the cell site is pretty massive. And the second is recalls. Chevy Volt is going to give a lot of recycled material to the marketplace. But the EVs themselves, the reason why you see a lot of these deals is the OEMs are being told pretty much by the government, you need to have a plan when you put a car into it to have it out. So I need to have, if I'm General Motors or Ford or Volkswagen, I need to have someone out there who's going to collect these batteries and recycle these batteries. But if you look, most of the plants are at pilot stage. There is no massive plans. There's different types of recycling technologies out there that I think we have to figure out. Some of them recycle everything. Some of them recycle most of the things, like very hard to get the fluorine and the electrolyte recycled. It's very hard to recycle the lithium. And the graphite, to get the graphite out is sort of problematic as well. But, I think we'll get there.
Erez, you're invested.
Yeah, I mean, we're definitely believers in recycling. First of all, we think it's important that, unlike with previous supply chains, the recycling sort of grows hand in hand with the primary industries that it's going to serve. So that we think makes a difference. It's not hindsight or in retrospect, 50 years after you started mining copper or tin, you realize that you have these huge mountains that actually contain useful payables in other materials. So I think it's important, first of all, in terms of efficiencies, because yes, at the moment the rejects and the waste and the scrap in production is 30%, but as things stabilize and get better and move from pilots to full scale, it will, I guess, tend to converge to the reasonable 5 to 10%, which I think industry has. There's also a lot of portable electronics and a lot of communication devices, etc. So all these recycling plants initially will be dealing with feed that's not necessarily EV feed, and EV feed and ESS feed might also have a second life because it's not all or nothing. It might not be robust enough to stay in your car, but disassembled, it can power 10 electric bikes in a third world country. So there's recycling, there's reusing, there's a lot of that, and I definitely agree. I mean, it's important for us to support recycling and to invest in recycling, and we think that there's a lot of money to be made, but in the interim can be in the next 20 years, we're still going to need a lot of fresh primary material. And even going forward, there's yields are never 100%. And population is not stagnant. Purchasing habits, etc., are not stagnant. So to have a 100% closed loop, probably not. But what we are already seeing, I think, is that although it may be challenging to reintroduce some of the recycled materials that are being produced now or are going to be produced this decade directly into a battery, into the cathode or the anode, what they are able to do is to free up units because they can serve other supply chains and free up units that are now in competition. So indirectly, even if it doesn't circle back and go immediately into the process, it's still very important in terms of the total demand-supply balance and these deficits that we are predicting going forward. So every gram that you can squeeze out on these materials is important, whether it goes directly into another battery or it doesn't. And the same, by the way, goes to primary. One of the things that we would love to see is higher efficiencies and higher yields in the primary. I mean, take lithium, for example.
Right.
A lot of the spodumene producers leave, I don't know, 30% of the lithium units in tailings because they only do a DMS and they don't do a flotation, which saves some capex and makes it much easier to operate. But going forward, that's something you want to squeeze. Same with implementing a DLE as part of as part of processes where you are squeezing lithium as a byproduct, like the Compass guys are going to do in Salt Lake, in Utah, like Vulcan is doing in Germany, in the geothermal. Like maybe one day will be done in desalination plants before maybe you can squeeze lithium out of the mud. Same with clays that, take Ioneer, for example, that got funded by Sibanye 2 weeks ago. Besides the fact that it's a great sedimentary project, there's also a lot of 1% lithium clay there that at the moment is being stripped. Imagine if this could be efficiently processed and brought into the system. So I guess what we're saying is that efficiencies and squeezing more units out of both the recycling and the primary are going to be very important in bridging this supply-demand deficit that could really rain on this parade.
Yep, excellent point. Just thinking on lithium, as you touched it, and we've had a few other questions around it. Are the efficiencies improving? And also, what about this low carbon or zero carbon produced lithium? Is that coming back to sort of the low carbon of the actual mining operation itself? Is that something you think is realistic, achievable? Is it a bit too much greenwashing at the moment? Is DLE going to work? Are you invested in these kind of projects?
Is this to Francesco or to me?
Yeah, sorry. Anyone else want to take zero carbon lithium?
There's some really, really, really interesting DLE technologies out there that could be zero carbon that are that being piloted right now, that if they work will massively change the lithium outlook. And so there's some, particularly the ones that use selective technologies, which can selectively take the lithium out of the brine. There are some interesting things that could be really, really, I've been to a lithium show in Vegas last week. Was really blown away by some of these technologies, and they do seem like they're pretty far along. So watch this space. I think you're going to find some interesting stuff going on.
Excellent. Good. Okay.
Yeah, I think on that, I think probably for brines it'll be easier than for hard rock. I mean, brines are less carbon intensive, so it's probably we think it's feasible, but probably for the hard rocks, given they have the pyro process down the line, it's slightly more complicated.
Yep. Okay, interesting. And are you more interested in brine investments into lithium brine projects and Latin American plays rather than sort of Australian hard rock?
We like them both, to be honest, and we've invested in both.
Okay.
We are out of those investments, but it's I mean, each area has its challenges, and each project has to be looked into in its own merit. I mean, brines, we all sort of put them in the brines category, and it's just one category, but they are very different.
Yeah.
So when you start looking into them, you realize, oh wow, and you might have to sort of adapt your process to make sure you're able to basically extract the other commodities in there.
Yeah, Adam, that's an important point. That DLE is an approach, not a single technology. It has to be custom tailored to the specific liquid that it's processing.
On that point around more sustainable supply, cleaner supply, are we going to see premiums? Have we indeed seen premiums come in for this kind of product? Are we seeing more demand for Canadian-produced nickel, for instance, as opposed to Indonesian nickel that might have slightly more questionable environmental standards? So Then there's also the distribution value chain, the carbon footprint of where you're shipping your materials around the world. Are we going to start seeing this split of price premium built into certain products because of their greener credentials, if you like?
What we're hearing from clients is that while every automotive company loves green material and they will put you at the front of the line for that green material, they will not pay you anything more for that green material. The only way you'll find out the premium is, what are the carbon taxes going to be? I know Tesla said last night begging for a carbon tax, and localization is only driven by a carbon tax. You know, a lot of clients want to figure out the calculation. Well, what if it's $100 a metric ton? What if it's $200 a metric ton? That carbon tax will drive the premium. Just like in, you know, there's a $15,000 average euro carbon tax on a European ICE that drives things. The regulatory area is going to set the premium. Otherwise, it's a great thing to have, but I won't pay you for it.
Our trading departments are saying the same thing. We have a large, a battery team that provides all the materials that go into the battery, and definitely green credentials, a clean and transparent supply chain from the ground, proper ESG and social license, safety, etc. Everything is extremely important, and it definitely is something that's a prerequisite for more and more transactions at the moment. But those sort of green premiums that perhaps the data speaking of, etc., the willingness to pay more for this type of material is still not there. And as Ken was saying, at the end of the day, it's how you distribute through these carbon taxes. At the end of the day, it's a question of how you distribute the externalities, the real costs. Do they just remain distributed in the vicinity of where the material is produced, or is it actually carried forward to the end user and the consumer and act as an equalizer in essence? Because once you actually through these taxes distribute the real cost and the externalities fairly, then it really makes sense. Otherwise, just to have someone be willing to pay much more for the same material is going to be challenging.
We've had a couple of questions on graphite and around graphite in the anode, where volumes will volumes meet demand? Where will it be coming from? And then also someone's asked about synthetic graphite, if we could tie that in. It seems to always stir a lot of concern about the environmental impacts, and we often get questions submitted around synthetic graphite and that, whether that's going to be the dominant, well, continue to be the dominant supply of graphite. So does anyone want to sort of tackle or address some of the issues around graphite there?
So
Kimberly,
I would just like to add that, it's going to be a mix of natural and synthetic. There's not, because synthetic has properties that are very good and it's consistent, and natural actually increases capacity. And so when you've seen, when I started this about, 4 years ago, they were saying, okay, well, graphite's hit its peak, and it didn't energy density wise. So there was some improvements, and you can improve by, adding and having the right balance and having that right mix. And so, yes, graphite, it's going to be a combination. It's dependent on the OEM of what kind of secret sauce that they put together and what kind of blend that they put together. But in general, it's a very good question about the environmental repercussions, because there was that article in the Washington Post about 3 years ago that said, that was basically that it was just dust in the air. It was, just the pollution that from the graphite mine, especially in northern China, that was absolutely, horrible, actually. And the bottom line is that is being cleaned up. So the natural is cleaned up. But the issue that people just don't really understand is that flake size is really, really, really important.
Right.
So the larger flake side of graphite, that goes to industry, that goes to nuclear reactors, that goes to the steel industry. And then if you have like the graphite that you put in a pencil, for example, you could make battery grade, anode material out of that, but you're going to need a lot of it, and you're going to need a lot of it to get just that battery grade. So there's a sweet spot. There's a sweet spot for cost. There's a sweet spot for, if a graphite mine has, large flakes, they're going to be sending, they're going to just send it to the industries that require that for quite a large premium. So you're looking at medium flake size. And so if you look at a graphite mine and you see that their flake size is small versus versus medium, let's say, then that's not going to be economical.
Yep.
Yeah, it's true. I mean, we invested in even more in graphite, and we have a commercial relationship with them. And there is, of course, there's always when you're talking about flake size in the ground, there's always a trade-off between what basically the size of the flake does is that as you micronize and shape the material in order to make it anode material, it's a trade-off between what you spend on sizing and what you spend on purification. Larger flakes tend to be purer, but you spend more energy on micronizing them, and vice versa. So there's always that that sweet spot. The problem with synthetic is that there's an embedded paradox in it, because it comes from from needle coke, which is the residue of refining oil products, petrol products, which to some extent graphite and new energy are going to displace. So potentially the more successful we are in relying more on graphite, less and less we will actually have the facilities and could provide the artificial synthetic graphite. So either we'll get a lot better at increasing the component of natural in that natural artificial silicon blend, which is the standard paste that it's that we smear on the thinner and thinner copper foil, as can we say. But there is a sort of an embedded paradox there, and perhaps if we won't be able to keep growing the component of natural within the anode blend, some ways of making green synthetic graphite will need to be developed.
Yeah.
I wanted to,
Adam, if I may add there,
Yeah.
I think it's not just a problem with graphite. I think in general, people have failed to realize that if we want more renewables, decarbonization, that means more mining. And that connection probably is still not there. If you look at an electric vehicle, we're all thinking about sort of lithium, cobalt, copper, nickel, but the motors still need rare earths.
Yes.
And rare earth, there's a process. Well, part of the supply chain is not exactly super environmental friendly. And that connection, I don't think people have actually grasped what it means.
Yeah.
And we need to do a better job at it.
Yeah, absolutely. We're often hearing in these discussions, there's a disconnect between the product and where it comes from, or speaking with someone the other day, and they were talking about how they approached an LP that said they invest in electric vehicle OEMs, but they won't invest in the mining companies that produce the metals that go into the vehicle. Why is there this consciousness or lack of perception around capital providers, certainly more generalist funds? And I guess that's mining cleaning up its industry to some degree, but also the educational piece that has to come through, which is hopefully what we can communicate more in these panels. I just wanted to touch on one last thing, if everyone's got time, because we did start a bit late, unless anyone needs to dash off on the hour. The infrastructure bill that's been announced in the US is pretty huge. It's going to provide record levels of funding. with the US infrastructure bill, what are the initial perceptions for those of you that have sort of followed it, or if you're there in the US, or what you're reading up on it? Do you feel that this is going to kick on to mining? Is it going to do enough to improve one of the largest energy grids in the world? And is that in turn going to kick capital into mining as well?
I think basically that there's going to be no choice but to start investing in these critical raw materials. This is the way it's going. This is what, like, you know, Biden, for example, did, you know, restarted offshore wind, and yet copper is not on their critical metals list. So you've got a very big disconnect. You've got a lot of catch up in the US, especially. And I think that, you know, and I just wanted to just add quickly that, you know, Europe has, you know, some regulations in place and some plans in place to actually have one, you know, to have all of these raw materials being, you know, not being, so it's sort of a deglobalization of supply chains within Europe, and to not be you know, so reliant on other countries for those raw materials. And I think that is sort of the trend. And so what we're going to see is that we're going to see probably some government incentives coming forward just to meet those green energy goals, as well as for electrification of transportation. Yeah. Because we talk about light duty vehicles all the time, but, you know, there's heavy transportation. This is all coming down the pipeline. It's going to be, you know, they require much faster charging infrastructure. They need dedicated charging infrastructure because they have larger batteries. And so when you think about that, you're thinking of copper, you're thinking of nickel, you know, you're thinking of all of these constraints that just keeps constraint after constraint after constraint on that supply chain.
Any other
on the infrastructure bill, I mean, I'm not a US based or taxpayer, but I think it was a bit disappointing, because if you look at the bill, probably there's about 1 trillion in infrastructure, but it's mostly sort of bridges, roads. There wasn't sort of anything specific about sort of grid and sort of charging stations. And the other 2.5 trillion, it was more of a social bill. So please, Kimberly, go ahead.
I would add, though, that if you've been to the United States recently, you'd see that their bridges and their buildings and things like that is like an absolute necessary, you know, a budget. And I think it's not necessarily a social thing. It's more like this is necessity and this is the priority. You know, they had a whole bunch of highways being built at the end of the war that weren't maintained properly. So you've got this very dangerous situation that was like long overdue, as far as I'm concerned. It was long overdue.
Yeah. So, let's not forget it didn't pass yet, by the way.
Priority thing, and yes, you know, the electric vehicles. Yeah, that you're right. I agree with you about the social.
I'm just saying that the bill, you know, does not, you know, link to the electric vehicles or you know, that side.
Yeah. So Eros mentioned, so it didn't pass through Congress.
Well, first of all, it hasn't been passed. It's 2 bills. There's the infrastructure bill and the second bill, and the thought was that they will go one after the other. But now there's a bit of an arm twisting about all or nothing and finding the equilibrium. But the $1.2 billion actually bill that we're talking about, it has. I agree. There's a large component there that's just refurbishing, dilapidated infrastructure, and that's to some extent similar to what we saw in Chinese stimulus plans, where basically cement and steel and copper and a lot of the traditional materials, the brick and mortar, will get a push on the demand side, which I think is good anyway. In terms of batteries, it does say that to the maximum extent practical, the critical mineral needs of the United States should be satisfied by minerals responsibly produced and recycled in the United States. You can read it any way you want. You can, some people will say we'd like the holes in the ground to be in Canada and Mexico and Finland, and we'll take it, from the midstream downward. But but at least in level of extension, it is a strong statement. And we do have, although most of the money does go to refurbishing infrastructure and the grid and so on, there are also substantial amounts allocated to stimulating the emergence of charging facilities, which is important as an enabler. And there's a lot of money that's available for R&D, which is also, I think, quite important. And there's a lot of money that's allocated to recycling projects. So it's not that that none of the 1.2 trillion there will go into our supply chain, directly or indirectly, as enablers. I think it will give a push. So it's a good start if it gets passed.
If it gets there. We'll be watching for that, certainly. Okay, well, excellent. Well, look, we've run over, but we did start a bit late anyway, so I think that's a good hour of discussion. And I'll just say thank you very much for all of our viewers for tuning in, and thanks to you guys on the panel for sharing your expert views around some of the challenges around what we need, the capital allocation to improve the supply side and enable this transition to keep on going. So thanks very much for your time today.
Thanks, Adam.
Thank you.
Thanks, guys.